Maximus Analysis here for March 8th, 2016, and we have a sell signal, meaning that we broke a previous day's low. We actually broke two of the previous day's lows and closed below them. So we want to see them hold, of course, this 1965 level we've been talking about, not close below for the week. We want to see them hold above that, and we want to see if the bulls get back into the swing of things. We want to see them get back above at least 1992 overnight, see if they can recapture that level to push for more upside potential. But they did get the sell signal from yesterday's 2003 level, and we'll continue to watch them accordingly. So again, if you didn't get in now, don't worry. Again, the same thing going up is the same thing going down. You look for your resistance levels on your daily, which would be around this 203, 209 area, and then you're looking for intraday, let's say if you're looking to go short, overbought conditions and whatever indicators that you particularly like, and you wait for it. Again, you don't have to use a 5-minute. You can use a 15 or 30 to get a little bit less risk, but still get a part of the trend going up or down. So again, we'll see what happens overnight, and we'll keep looking at it. In Q, again, we want to hold this, they're still holding this 42.58 level. Again, they need the 41.36 level, and if they want to get on the bull side, we need 44.55 to be recaptured and closed above. So again, they've been having a pretty tidy retracement based on this impulse bar to the, and again, most people will say, and even I would look at it to say, listen, this might be capitulation at the end of this run. But until it holds, at least the low of this, you have this one bar that 1, 2, 3, 4, 5 days has not even gotten almost, to the last quarter of the bar. So again, this could all be negated if they, gap down, or if they break today's low and then break this low, then it's really looking for something. But again, the NQ's weekly time frame actually looks a little bit better, but it's still, you can see we're still churning sideways, and they haven't gotten up to they haven't even got up to this. So again, break of this previous week's low, and we can see some more downside potential coming for that one. And again, overnight we'll see, again, we have to be dynamic here. You have to continue to be flexible. So for the YM, we want to see them hold a 16,750 area. Again, the big number is to get above or hold the 16,660 all week. And again, they barely broke yesterday's high, so break above this high could have a, you continue to see these moves up, and they're just, again, the volume's light, but they're continuing up. And again, from all of the indexes, this one actually looks a little bit better in regards to how the price formation is coming, even though you have a heavy component of the Dow, which is the Goldman Sachs, which you can see was down about $3 and something, is really weighing that name down. Going to crude, you can see you have basically we're in a line in the sand here. We really want to see them. We want to see if they're going to break down, them hold this 34.40 level and bounce back up to potentially go. I know a lot of people are going to look at this as a target for this 200 moving average. You really just want to make sure that if they break down, we want to hold 34.40, or we're going to have targets of at least 33, and that's back into the chop. And then it could, again, if it breaks lower, then you're looking at, I don't even want to talk about those numbers, quite honestly. So let's see what they do here. Again, this weekly, I'm still looking to make sure that it's so far, it's only Tuesday. So again, it's still below this pivot. So this pivot is previously around 43, 44. So we'll continue to look at that as overhead resistance for the time being, always making sure we're looking at some higher time frames. So let's just go over some quick names. And first one we'll start with is Amazon. And they need to hold 550 to 552, which is basically, they need to get, that's basically around the 200-day moving average. This is, again, they're just popping, and we really want to see if they're going to hold above that. And the weekly for this one is kind of so-so. again, it's giving a nice tidy retracement to the upside. And this is the one that would have the potential of having a head and shoulders type of pattern on the weekly for more downside potential. So keep that one on watch. Price line, again, price line, I think I think you would more look at like a weekly time frame. Well, matter of fact, it's very hard to look at this because of the weekly time frame, because of that huge gap up. So I kind of don't know where to call it. So again, what you really want to do is manage risk properly, because these options are going to be pretty pricey. So to get into each contract on the put side might be $2,000 compared to the other names that are within the $100 range, and you don't know where it's going to go because of that weekly. And I like to have the higher time frames, kind of gave me some confirmation to go into to shorter time frames with. And with that type of move, I'm not really sure. This chart is Netflix, and you see we got into this band of resistance here. And for Netflix, it's just, again, over 100, and you see the bulls kind of come back to it, but they're still kind of just grinding up, and we want them to they've held the previous high, okay, but we want them to hold this level and not really give a significant gap down or anything of that sort, and regain the 100 and push to that 200 and hopefully have some volume behind it. And last but not least, Facebook. Again, we want them to hold this 103.60 area, and of course the 100 level. Hard pattern we've been talking about, but again, you still have to have some type of bullish bias here, and the weekly is just really difficult to kind of see. I wouldn't even entertain looking at this as like a head and shoulders, but they broke last week's low, but they, not that much volume, but not really doing that much for a long time in regards to just a weekly time frame. You can see they had this sideways consolidation, broke back into it on the dip, found support, and then it's just been, they've never. I'll give an example here. Let me see if I could show you guys. I can't get. Let me see if I can get this tool. Yeah. So once they get like to this, where you see them going sideways, right? Sorry, you're going sideways, you really want to see them never like kind of go back into that. So again, same thing as if you're going to these highs, you kind of want to see them bounce off of it, but you don't want to see them dip right back in and come and pretend. It's just not showing levels of strength. And again, it could continue higher, and of all these lows are higher besides this epiphany kind of movement, which we saw the entire market do this on last August. But kind of just wash that candle out and say, okay, they still have higher lows here, here and here. So we still gotta respect it and see if they're gonna break down below, versus trying to just be the one calling the top, which is, to me, a very corny way to go. So again, we'll continue to watch this, and with this ES to really eye for what's going on tonight, because they're back into the 1980s, and again, that's the reason why I post this stuff, is because it's it's relevant, more relevant than people think. They have a couple days up, or you had a huge rip off of this low. The lows were 1802. Not saying that this was not a hell of a run, 200-point run, but let's not completely forget about all this. So we want to see if it's going to continue something like this. 1 bar. Again, we talked about the neat retracements that we like. 2 bar, 2 bar, 2 bar, 1 bar, and then continue. Or we're going to see them, kind of not get over this prior support, which becomes resistance level, and retrace for some more downside. So let's continue and see what happens tomorrow. Again, oil traders, remember that you have the EIA report at 10:30, and we'll go from there. Take care.